Good afternoon. Today is March 4th, Thursday. We're going to be going over a trade review for a 540% gain on the Qs. We will get into that right after this. This is Patrick and you're trading with Prime. First thing we want to take a look at here is this 540% gain on the triple Qs. We took the put options. And if you guys notice lately, I've been doing a lot of QQQ trades. And the reason for that, we're going to go ahead and show you on the chart here in a second. But mainly the reason for that is the Qs. Well, for one, possible inflation and what sectors and what markets that can affect more than others. The other reason why is if I take a look at the chart here, actually, let me go to the weekly time frame. If you'll notice, this is the weekly time frame on the triple Qs, the NASDAQ. And out of all the markets, this one is, and I don't want to call this necessarily a bubble, but that's, even though that's what this really looks like. The thing is that the Qs have ran a lot further and basically a lot farther than any other market there is. Maybe the IWM comes close, but you're talking from the March lows to the highs of 338. You're talking 100% from the March dip. And of course, now it looks like a dip. At the time, it was a crash. But you can see how high we are up here. And so that's pretty much the main reason, one of the main reasons why I am choosing the tech sector to short as opposed to anything else. Let me go back to the daily chart and kind of show you guys what I saw here. The other thing is in a downtrend, what we want to do is it's a lot easier to make money on the way down versus trying to pick the bottom and go long on any given name. In fact, let's do this. So this is the overall picture of the Qs, and then what we saw on this yesterday. Let me get the good old pen out here. You saw the extremely bearish close yesterday, right? In fact, let me do this. Let me just bear with me here. Bear with me. So here's the thing. You saw this candle yesterday, right? Taking out the previous lows. Look. So here's the consolidation period. I really got to clean this up. Here's the low of the candle. Okay. Here's a consolidation area. Here's the down move, creating the what we were talking about, the bear flag scenario, creating a bear flag, and now here it is playing to the downside. So the thing with trading is that pre-market and going into the morning, what the kind of morning behavior that we saw in the market. Even though if you zoom out to the daily chart and then look at what the market is really doing, all it's doing is just retracing up this candle that had already closed below the previous weeks, all the candles within the last week. So it's highly likely, I don't know what the percentages are, it's a really high percentage chance that this is not the low. 309.17 is not going to be the low. And so what happens is we zoom in a little bit. Let me go to the 15-minute time frame and kind of button down what happened here. So as we're coming into the market open today, we notice that, well, for one, you see how there's lower highs, lower lows on the chart. It's a lot easier to short the rallies than it is to go long on the dips. And so what we talked about this in the last video, that you have this pivot up here. We talked about shorting the Qs right here, booking profit. But I also said in the video, I believe it was yesterday or the day before, I also said that you could go long, that it's possibly a good long trade setup, as far as maybe it did come from this area right here, and here we are, here's the bull flag, and it plays out, and then we rally more up here. This little pullback, maybe if it wasn't at the end of the day, maybe we could go long at that pullback. That's kind of what we were narrowing down here. And if I come into the morning, you can kind of see how traders coming into today, which I don't have it on. Let's do this. Let's go appearance. Work with me. Okay, so now we can see the after hours. And so what happens is you see this after hour dip where it pulls all the way down here, down to 305.55, and then it rallies a little bit. Coming into the morning, you saw a pretty bearish candle. It rallied a little bit and then sold off and then rallied. A lot of traders got sucked into this little rally right here. I'm going to kind of highlight this. A lot of traders were thinking of going long right here. And well, for one, it is Fed Powell, and people were wondering, is it going to be the put Powell? Or the Powell put, or is this a good place to go long, and then the Fed's going to come rescue the market and save the day, and the next thing you know, we'll see 340 again. That's possible. So whether you were going to take a long trade out of this going into a Fed meeting, that's really trader's choice. I felt very confident and comfortable, and you'll notice I only picked up 10 contracts. Only costs $500. So going pretty light into the trading day, I saw this rally right here as a prime No pun intended on the prime. I saw this as a nice area to go ahead and take a short trade. And if I zoom back out, let me go to the hourly time frame. And I hate to keep jumping around on you guys, but we, as traders, sometimes we overcomplicate it and we make it into a more complex thing than it really has to be. And I'm not saying like, you know, you guys make it into something complex. I do that, you know, like I make it in a more complex thing than it really has to be. And so if I go over here to turn off the extended hours and really clean up the chart for you guys, you'll see it, and it's one of those things that just kind of smacks you in the face, and you're like, well, of course you know, this is what happened. So as you can see, we rallied up here. This little rally was just back testing the previous pivot that I had gotten rejected from. And then coming into today, you saw how we took out the lows. Let me do this. If I drew a line across the screen just like this, today's price action opened up, the market opened up, or it opened up here, sold off a little bit, rallied up into this price area right here, this resistance area. All it did is it went and back tested this previous area of support, which was now flipped resistance. And as you can see, the market sold off. A really good way to look at this is, let's do this just to make it sometimes easier. Not that I look at the QQQ, but sometimes when we're trading the market to the downside, sometimes it's easier just to get a sense of awareness on where price action is. And if I just pull up this chart right here and I ask you guys, does this price action, yeah, maybe this is a downtrend, but does this overall price action in the T or S triple Qs, does this look like it's bullish or bearish, right? So we have to just trade it like it's bullish. We have to trade the SQQQ like it's bullish, which would mean what for the triple Qs? It would mean the triple Qs are bearish. Back to the triple Qs. Now, as far as exiting the trade, there's no reason to get greedy, no reason to exit the trade. But for those of you guys who wonder why it was that I was targeting $300 and why I exited there, and by the way, the alert was posted in the Discord as far as the exit. I was a little bit late posting the alert for the original trade taking place. I was up a little bit on the trade. I think it was up 300 bucks. But overall, closing out the day, three grand on the triple Qs. There was plenty of time to get in, and really what I say is you can short any kind of pump that we get throughout the trading day, or we can go long on any kind of pump that or any kind of dip we get throughout the trading day. And as you can see here, this is why I was targeting $300. You can see right here where price has a really hard time getting through resistance, and finally it gets above, and not only gets above, but it already came back and back tested, and that was the last time the Qs had been at 300. That was the last time. This overall pattern right here can be a let's just go back test 300 really quick and then we'll rally from here. Absolutely can be. The second reason why I got out of the trade right there is you saw this original down move, and then you had what we were saying in the last video is bearish consolidation, and then another down move. Bear flag, if you did a little measurement here, and I took a little pen and I said, you know, this price area or however many points this is, and then you add that to this area right here, and it's about 300. Not to mention, I don't even think we got all the way down to 300. If I put it on a 15-minute time frame and zoom in, and I really hope I'm not talking too fast for everybody. It's just that I'm trying to get out of here and get you guys on your way here. If I look at the low of this candle, low of the red one, is where are we at prime? $300.11. And then the following candle low of that is $300.15. This can absolutely be a low. This might be a bounce from here on out. It might be a bounce into tomorrow. I'm not saying that that's what the case is. I'm just saying like that's what it could look like. Let's go to the 2-hour time frame and let's zoom in one more time. And now you see the reversal candle on a 2-hour time frame, right? See the reversal. Let's see what kind of price action we get. For me to be a buyer, you guys, I don't know. Personally, I would say, you know what? Tomorrow's Friday. Do we want to be dip buyers tomorrow? Like, let's say we see the market open tomorrow and then it shoots down here. Well, if support holds, I'm willing to go long on a higher high. I'm willing to take a long trade, higher high going out of this area. But just keep in mind, there's definitely going to be resistance at the top of this area right here. There's probably a little zone in here, and I'll give you a price target of around 310. Another one above that is probably the next pivot up here. So all in all, I think that it is possible to be long against this 300. Knowing that if price were to close at any point below $300, that you would simply be stopped out of the trade. And before I let you guys go, let's look at one last thing since we've caught my attention here. Let's take a look at Apple. Apple, bullish or bearish? You guys feel? Let me know in the comment section. Let me know in the comment section. Bullish or bearish? Microsoft, Bullish or bearish? And I don't mean the overall pattern. The overall pattern, of course, it's bullish. But I mean, as far as this part might be bullish. But as far as this overall pattern in the circle, is that bullish or bearish? Do you think that this is a low? Or do you think it's highly probable that we'll come back down to this area here? In fact, let's just do this. Buyer at 217.80, Microsoft. Let's go back to Apple. Could be a buyer here. I love this 114.40, or maybe even this 116.78, right? Not saying it'll get there. I'm just saying if it did. Amazon, bullish or bearish? It's at support. You be the judge, though. It's at support, right? Bullish or bearish? Okay. Google. Bullish or bearish? Google looks pretty good out of all of them. See the difference? See where the price is on the chart compared to the others that we just looked at? Okay, work with me here. Let's go Netflix. Bullish or bearish? Probably a little bit lower, huh? 501.20, maybe even down here at 492.95. What did we miss here? Let's do Tesla, just to spark my interest. Bullish or bearish? Highly probable to be fill in the blank. Leave a comment on the video. Facebook. Bullish or bearish? Right? How many times do we have to bounce on support? And what we're saying is that when price comes down to support, what you want to see is you want to see this kind of price action. It comes down to support, right? Comes down to support and immediately does what? Trades away from support. If it comes down to support, trades away from support. Coming down to support and creating consolidation just above support is usually lower prices. Not saying that that will happen. You can definitely be a buyer at support as long as you know what price you are going to be wrong at that trade. If you know what price you're going to be wrong. Do we miss any more for, let's see here, Facebook, Amazon, Apple, Microsoft, Google, you name it. And the reason why I bring all of these up is because weighted in the triple Qs or weighted in the NASDAQ thing is roughly 40% of the NASDAQ, right? So if I go back over to the NASDAQ, bullish or bearish? It's at support for sure. And in fact, that can be a bounce from here, right? Just based on this, everything that we just looked at, that can be a bounce from here. SPY. Let's look at SPY. And I'm going to kind of run with you guys. This will be the last one we look at. SPY, bullish or bearish, right? You can be long here, not based on the daily chart, though. The daily chart looks really ugly. The daily chart says that this is not the low, right? But it doesn't mean that intraday and lower time frames that go down to the 2 hour, maybe we'll see a reversal candle in here, because we do know it starts at a 2 hour, there is a reversal candle. And a lot of times, what do we see happen? It's not going to go straight down, right? So what's going to happen? It's going to go down. It's going to go back up and do a back test and then down, right? It's not going to go in a straight line. Nothing ever really goes in a straight line except GME when it was on its run up. That'll be it for today. Leave a comment under the video if you guys gain value out of this video. Feel free to hit the like button. If you are not a member of the Discord and you would like to be, feel free to shoot us an email. Go to the website, rtbtrading.com, or check out the link in the description of the video for the Discord. Talk to you guys soon.